And get this started. Hi, thank you for joining me today. It is currently Tuesday, October 9th, 7 p.m. Eastern. And let's get started, shall we? We've been talking about New Zealand USD for quite some time now. And I'll open up the share screen so that you can see what I'm talking about. This could be funny. Okay, now let's move this a little. And here we go. So we've been going through, or I've been going through NZDUSD since June 25th. And here is where we're sitting. If you remember correctly, yesterday when I did the video, we were at a negative $38.20. It's come up to negative $35.38. That is good news. That's close to 300 pip different than it was before. Hi, welcome. Please hit your mute so that you cannot be hearing anything from the other side of where you're at. But thank you for joining me. As I was saying, this is New Zealand USD, and it is a buy. It's been going on since June 25th. My entry point is sitting at 0.68310. And my stop loss, believe it or not, is 7,000 pips or $70 negative. So the stop loss would be 0.61310. My take profit is also sitting at $7,000 pips or $70. And it is sitting at 0.75310. Now, many people would look at this and say, why are your stop loss and take profit the exact same amount? Because it's a one-to-one risk to profit average, one-to-one ratio. And I keep it that because I'm in a trade longer than a day or a week. In fact, it's been for actually almost 6 months now. And don't let it worry you, because I know how to read it, and I'll show you how. This is what you call a naked chart, meaning there's no indicators on here. All you have is the entry price, the stop loss, and the take profit. And I'll show you why. But before I show you, I want to let you know the reason I have a naked chart, so to speak, is because every night going through seizures, I lose my memory. And every morning I have to relearn everything. It's a little difficult to relearn the indicators as well as the supply and demand and all that most people have on their charts. But I'm also at a daytime chart. And here's why. Many people will start trading in a minute. Looking at this chart, I don't see much here. I don't see the full story of this trade or the trend that it's been carrying. And I don't know if it's possible for anyone without indicators to be able to see what's going on. So I head into the 5-minute time chart. Once again, this is like, for instance, if you were reading an excellent novel, you wouldn't do too much time in the first paragraph, because most of the time people can read the first paragraph in a 5-minute time span. Can't do much trading in that. So you don't have the full picture of the story of what the trade's doing or of the book that you're reading. Moving into the 15-minute time chart, I see a movement, and For those that like to trade on the lower time charts, that's perfectly fine. Whatever you're comfortable with is where you are. This just isn't mine because I don't see the full picture as of yet. And we have the 30-minute time chart. And I know of many traders that trade on the 30-minute or above. Well, once again, it only goes back to August of 2018. That wasn't too long ago. So it doesn't give me a full picture of what's going on. Moving up to the hour time chart. Now, don't get me wrong. Many traders in the Forex area or in IML actually trade in the hour time chart. They also are not in the trade longer than a day, an hour or 4 hours tops, and they're in and out. There's nothing wrong with that. If that's what they're happy with, that's great. Not a problem. It's just not the full picture, the full story of what this trade can do. Moving on to the 4 hour, this is ideal. You can actually see quite a bit here, even without indicators. But I'm kind of wondering what took place previously to November of 2017. Because I can, the pattern, the trend, the trade isn't showing much. So it could go up, it could go down. I don't see many head and shouldered indicators or any other type of resistance for supply and demand. Keep in mind, the words I'm using, if you have never traded before, may seem like a foreign language. And that's what is needed to train on, to know what the vocabulary is. I don't stay in the 4 hour. Going into the daytime chart. Now this is where I normally stay when I do my trading, because I can take a look at this and it goes back to January of 2014. That's a good for almost 5 years. We're close to 5 come December or January, which is only 3 months away. So we're getting close to our 5-year period. Now, if you take a look, when you trade right, but you look left, because this specific trade and every trade will tell you what their history is. And it always repeats itself. Always repeats itself. One moment, I've got some noise going on. There we go. So once it repeats itself, you can actually take a look at this and go in left, and you can see where it's sitting right now. And you move your cursor over to the left, and the next point that's matching up, that's normally the trend that you're going to see this trade do. It always repeats itself. Always. It might take time, and it truly does, but you will always see it change. And if you look closer right here, you've got some flags, and you got some head and shoulders, and you got 3 inverted head and shoulders. And all these indicators I'm mentioning are what I have to learn throughout each and every day, which is why it's not on my time chart, which is why I don't mark up the chart. But being that just last night we came up, it was a negative 39.820. So it's literally come up into towards profit over 300 pips. At the end of this, I'm going to have a minimum of 7,000 pips at the end of this trade. It's patience, it's consistency, it's no emotion, and it is perseverance. Don't have your emotion when you trade, because it's going to hurt you every time. Losing $70 is not that big of a deal when I have a balance of over close to $900. 70 bucks is nothing. Nor do I use that for my bills, my mortgage or rent or food or utilities. It's not part of it. It's totally removed from my balance. So I'm not worried about, uh-oh, I can't pay my bill because I traded this. That has nothing to do with it. That eliminates the mood, the emotion. So if I lose $70, oh well, life goes on. But I'm not going to be losing my account overall close to $900 worth. It's close to 90,000 pips. And I don't think I'll get there. What do you think? So as we've been talking, we've already dropped down to 34.98. So it's looking really, really good. Thank you for asking me that. How many pairs do I trade at one time? One. Because I keep my risk managed, my margin level at over the 4,200%. Many traders say, oh, you can go down to 100% and be okay. But you have the chance of stomping out and losing your account. I like to keep mine at a minimum of 2,500%. The maximum can be anywhere above 3,500. That means I won't be stomping out of the account anytime soon. I won't have to worry about having my account shut down. And that's why my margin level is high as it is. Another question. Yes, I do trade the same pair for an extended period of time until I actually have made it through where I've gone into profit. And when this trade goes into profit, goes above my buy limit or my entry price, and it's closer to my take profit, I will adjust my stop loss to be above my buy entry price. That way, if it turns around and comes back down, I don't lose any of the profit I've gotten. Now I'm going to stop my screen share real quick and see if there are any other questions. Do you have any other questions for me? It doesn't sound like it. Okay, well, if you want, you can either type them in the chat or you can unmute yourself and write them. Yeah, I am definitely in this trade and definitely run this trade. It is going to work exactly how it looks. Because of what's been going on, bring back my screen share. Because of how it looks and the pattern that it's given me over the time frame I've been in it, it is literally showing me that it is going to turn the other direction. No, it's definitely not too late to get in. You most certainly can. You just won't be as deep as I am with your stop loss. Your entry price could be at the same price, but it won't hit it. So you might want to put your entry price right where it's sitting right now. And when it turns, you'll actually be in profit instead of stop in your loss area. Does that answer your question? I guess we're through for the day. Thank you for joining me. Keep in mind, don't trade what you cannot do without. Believe me, you'll be happy that you don't. Because more than likely, the chances of the trade going opposite will hurt you. Is it something, Tom? Hey, you're breaking up. Okay, well, have a great night, and I'll see you tomorrow. Bye for now.